It was a deal aimed at accelerating Australia's transition away from fossil fuels, and it had the consumer watchdog's backing. But in the end, shareholders knocked back the takeover offer from a consortium led by Canadian asset manager Brookfield.
It's too low, and I feel we should be an Australian company, not foreign owned.
What's going to happen is that we're going to have foreign ownership from a Canadian investment firm, and then they could then hold the New South Wales government to ransom.
I can't see any reason why you'd sell the company out overseas owned. Like, we're Aussies, we can do it.
Origin needed to secure the backing of 75% of shareholders, but only 69% were in favour. The nation's largest super fund, AustralianSuper, used its 17.5% stake to block the takeover, arguing the offer of $9.39 per share undervalued the company. It said the value and future value of Origin is better in the hands of members and other shareholders rather than a private equity consortium seeking to make a quick return, and that the super fund is open to providing capital to assist Origin.
There's going to be no shortage of opportunities for co-investment alongside Origin through the energy transition.
Investors are hoping that with the backing of big super funds, Origin can ramp up its investment in renewables. Without it, there's warnings electricity prices could stay higher for longer.
In the near term, the no outcome has no direct bearing on the price of electricity, but over the next 2, 3, 4 years, we need to see capital deployed. Brookfield was offering to deploy 14 gigawatts of new renewable energy capacity. When you increase supply, you lower prices.
The transition plan does remain the same, so we would be looking to build about 5 gigawatts between now and 2030.
Retail shareholders are also calling on Origin to step up its game.
It's really important for Origin to really consider, do they have the right plans in place to deliver on the government targets that they've set in place around decarbonisation for Australia.
The failed bid comes as a new report from the Climate Council found Australia's biggest financial institutions are highly exposed to climate risks, but keep investing in coal, oil and gas.
Banks and super funds, are still investing in expansion of fossil fuels, and this has to stop now. Yes, they have to get the returns, but they have to do so in a way that is not going to destroy the economy, create increased financial sector risk in the years down the track as climate change worsens.
It's a message that big companies and their cashed-up investors are starting to heed.
I spoke to Origin Energy's chair, Scott Perkins, straight after the vote and began by asking him to describe how the process played out.
It's been a battle about the value of the company and what the future prospects look like. So we've had a great deal of support from all of our shareholders as to the way in which the company has conducted itself, and we look forward to realising value for shareholders over time.
You pointed out that deliberations dragged on for more than 400 days. Did it simply take too long for the value proposition put to them to remain current?
Our directors' duties are to assess what is put in front of us in an expeditious but considered manner, and with the various iterations and the regulatory approvals that were needed to be obtained, principally ACCC, the timetable was attenuated, yes. And over that period of time, Origin's continued to execute on its strategy and its prospects have improved. And clearly that has impacted in some shareholders' view of value. But the timetable is largely outside of our control.
The share price has plunged today. What do you see happening now? Is there another plan by Brookfield and EIG, together or separate, or could you see Origin becoming the target of a takeover, potentially a hostile one?
Who knows what will happen in the future? People are free to make approaches to Origin in the ordinary course of that business, and again, we'll be guided by our directors' duties.
Was this, as the former Prime Minister Paul Keating has described it, a pure equity private play by Brookfield and EIG?
So the Brookfield EIG offer was subjected to quite a degree of scrutiny, and I do note that the ACCC concluded that there was public benefit in the transaction. So I don't think the credentials were ever called into doubt as to what Brookfield and EIG might have brought to bear. However, Origin will continue as an independent company, will continue to invest into the energy transition, and we certainly hope will earn good returns for our shareholders, and we're obviously very focused on realising that over time.
The ACCC provided conditional approval for the bid based on the implications for Australia's energy transition. The fact that it has now been knocked back, will there be ramifications for the transition?
Well, clearly that public benefit was one that, as I mentioned, was put under quite a degree of scrutiny, and Brookfield's plans were to accelerate Origin's own strategy into the energy transition. We're at the early stages of that transition, and things are certainly need to speed up. We desperately need, obviously, transmission to be built in order to connect the renewables that are in the centre to demand that's on the edge. So I'm sure that with the right kind of regulatory stability, the right kind of quality operators, the right kind of customer bases, that the energy transition will accelerate as we expect, and that will present, I think, some quite attractive opportunities for Origin to invest.
AustralianSuper, in its statement welcoming today's result, has said that it is open to providing capital to assist Origin as it prepares for the transition. What is your response to that?
AustralianSuper has been a long-standing and very constructive shareholder of Origin. When our stock price was in the $5, to have a 12.5% shareholder back then was very reassuring, and now they've put their money where their mouth is and invested further into the company. We've always conceived of the energy transition as presenting opportunities for third-party capital, and having a major shareholder like AustralianSuper certainly would be a potential source of that capital alongside others, of course, provided the cost of capital was competitive for Origin shareholders as a whole.
Scott Perkins, thank you.
Thank you.